my tourism Pathshala, it will transform your dream into reality. Good afternoon, my dear student. Today we are going to solve the June 2025 question on multiplier effect. The question is the evaluation of economic impact of tourism from quantitative perspective is essentially based on the concept which is defined dash concept of dash which is defined the ratio between the value of sales, output, income, employment or government revenue generated and the initial change in tourist spending or tourism related investment. They have given the four options: income, economic growth, multiplier and expenditure. The correct option is the multiplier effect. This question is a question of June 2025 and question number 53. Before solving this question, we have to understand what is the multiplier effect. And before that, I want to inform the important information. The student who have decided to appear in the December 2026 UGC NET tourism exam, and to get the online classes, syllabus wise coverage, the PDF note and doubt clearing session, you want to take the private tuition or private guidance from me, you may contact with myself 9123718149. Now come to the point of the concept of multiplier effect of tourism. What is the multiplier effect of tourism? The tourism multiplier effects refer to the repeated circulation of tourist expenditure within an economy. This point is very important. Repeated circulation of tourist expenditure. The income received from a business is spent again and again, creating more income, employment, economic activities. There is different types of tourism multiplier. Number one, income multiplier is related to tourism expenditure generate income for hotel, restaurant, transport, guide and other businesses. This is called income multiplier. Income is partly spent again in the local economy. Second is the employment multiplier. Create the direct employment in tourism industry and also indirect and induced employment in related sector like agriculture, handicraft, construction. These are the induced income. I have already discussed the different types of economic impact, direct, indirect and induced impact. You may follow I will give you the link of the video. You can follow this. You will get the detailed conception. Third, output multiplier. Increase tourism demand, encourage business, increase production, goods and services. That is called output multiplier. The encourage this is the business to increase the tourist demand, encourage the business. Fourth, government revenue multiplier. Tourism generate taxes, fees, other revenue from the government. So, and finally, number 5, foreign exchange multiplier. International tourists bring foreign currency, which improve the balance of payment and support development. So, how the tourist multiplier work? This is the money circulate repeatedly in the economy, through the tourist expenditure, hotel, food, transport, shopping, entertainment, business income, hotel, restaurant, transport, employee income, salary, wages, benefit, further spending by employee and business in the local economy, more income, employment and economic growth. As an example, suppose tourists spend 10,000 as a destination. So tourists spend from the hotel, restaurant, transport service through business, pay worker and supply spend part of their economy. Other businesses receive additional income. These are the circle. What is the importance of tourism multiplier? Increase national and local income, number 1. Number 2, create employment opportunity. Number 3, encourage local production. Number 4, support small and medium businesses. Promote regional development. Generate government revenue. Encourage infrastructural development. What are the limitations? The limitation is related to the leakage. The multiplier effect can be reduced by leakage, such as import of goods and services. When the people of the destination going to import goods and services, money leakage can be happen. Profit sent outside the destination. Taxes and savings is a considered is a limitation or leakage of the multiplier effect, and dependence on foreign owned tourism company. So foreign company get the benefit. So that's another way of leakage can be happen. So tourism multiplier shows the economic impact of tourism greater than tourist initial expenditure because many money circulate through different sector of the economy. Now I try to now we move on to solve the question. The evaluate of economic impact of tourism from quantitative perspective is essentially on the concept of multiplier, which is defined as the ratio between the value of sales, output, income, employment, or government revenue generated and the initial change in tourist spending or tourism related investment. So, explanation of the answer, the given definition in the question exactly matches the concept of tourism multiplier or multiplier effect. The multiplier effect is the ratio between the total economic impact and total economic impact generated by tourism and the initial change in tourist spending or tourism related investment. Economic impacts such as sales, output, income, employment, and government. The tourism multiplier it measures how an initial amount of tourist spending create individual economic activity in the economy, which when tourists spend money on hotel, restaurant, transport, shopping, that is spent by the business employee and creating multiplier. Thus, the multiplier effect formula is total economic impact by initial total expenditure. So, multiplier is the ratio between total economic impact and initial tourist expenditure. So, multiplier can measure sales multiplier, output multiplier, income multiplier, employment multiplier, and government revenue multiplier. As an example, suppose tourists spend 10 lakh in a destination. This spending ultimately generated 25 lakh tourists at 25 lakh in total income through repeated spending. Through repeated spending, circulated the money. So ratio 25 is to 10, 2.5. So multiply 2.5. What is the meaning? That it means every 1 rupee spent by tourist generate 2 rupees 50 paisas in the economy. The key formula we have to remember, tourism multiplier. Sometimes UGC provide the question based on formula. The multiplier equal to total economic impact by initial tourism spend. So these are the Keynesian economy. In Keynesian economy, Keynes is an economist. The K equal to 1 by 1 minus MPC equal to 1 by MPW. You have to remember MPC means marginal propensity to consume. MPW means marginal propensity to withdraw. So, these are the important formula of the multiplier effect. 1 by 1 minus MPC. MPC means marginal propensity to consume. MPW marginal propensity to withdraw. 1 minus MPW. Why other option is the incorrect? Because income is only result of tourism, not concept that measures the overall economic impact. Economic growth means tourists contribute to economic growth, but the question asks for the ratio used in evaluating income. This is the expenditure is the initial spending, not the measures the overall impact. So multiplier effect or multiplier is the correct option. So my dear student, I try to give you the step by step solve all the questions and answer from previous year question, and by the help of the question I try to give the detailed explanation of the conception. These conceptions a related concept is a very effective to solve the further question. Any kinds of question will come from this area. It will effective for you to solve and change the question. So if you need any guidance, any private tuition or guidance from me, you may contact with myself. Keep touch with this channel, like, share this video through your colleagues or friend. Thank you.